Well, hi, everybody, and welcome to this webinar. The webinar today, featuring Jim Dalton, is about sight. It's about how we look at the market, how we look at our screens, what information do we see, and above all, how does the market profile facilitate market understanding? And Jim is going to be covering these topics, and if you have questions, please just type them in. Now, a little background on Jim, for those of you that don't know him. He's the author of two of probably the most important books on the market profile, Mind Over Markets and Markets and Profile. And when I talk to traders about it, I say that basically the Markets and Profile is the context for Mind Over Markets. And I'm sure Jim will talk about that a little bit as he gets into the presentation. In addition, I've asked Jim to talk about his upcoming intensive, which begins in September and goes for the balance of September into, I think, almost the third week of October. And I've asked him to comment on that and the preparatory, let's say, process for the intensive is his online course that he has put together. So without further ado, I want to introduce Jim.
Okay, there we go. You can see my screen okay?
Looks great.
We're going to talk a little bit from the screen, and then I'm going to go and show you some examples of how to look at a market. I'm going to pay some particular attention to last night. I'll start with yesterday morning and then last night and what happened early this morning, because it was readable and understandable. As Terry mentioned, we're doing an intensive starting September 22nd, and it goes through October 22nd. It's about 4.5 weeks. There's 2 to 3 webinars each day, with the exception of Friday, we only do one. Question answers constantly. We do replays. Sometimes at the end of the day, we will replay the entire day so we can stop, start, and look at it, which is one of the great features on Window Trader. But it's a great learning tool. It allows us to replay, but you can do the same thing with your Window Trader, to replay, stop, and look. And that really is a very, very educational way to approach this. In addition, the way most people advance in any kind of profession starts off with some form of basic knowledge, followed by mentorship, and then repetition with variation. In most cases, the mentorship is prohibited. The last time I did anything with mentorship, and the reason I don't like traditional mentorship is the people can't absorb the information fast enough. The last one we did, it was $57,000 with expenses for the week. The intensives, about $1,200. But also during that intensive, we have what we call live commentary, which allows me to input from my computer screen to yours a comment on the market. And if I want to put a graphic up, I can put a graphic up with an arrow and a comment so you can see what I'm talking about. It's our way to stay as close to you for that 4.5 weeks as we possibly can. Now, the intensive is not for beginners. The prerequisite at a minimum is the foundational e-course, which Terry talked about. Okay, I do hope some of you take a look at what we do. So let's start off. The most important sense for short-term traders is sight. And it's one of those things that we take for granted, but in fact, there's an awful lot to it. We start off, here are the basic senses: sight, sound, taste, feel, and touch. So think about it. when you're getting trading information, you have to get it into your brain. There's only one way today to get that information into your brain, and that's through sight. You can't hear it, you can't taste it, you can't feel it, you can't touch it. Now, what I'm going to do, I'm going to contrast that. When I was first on the floor, as a floor trader on the floor of the Chicago Board of Trade, as well as the Chicago Board Options Exchange, as traders on the floor, we had an advantage because what really happened on the floor, the input we got into our brains was via sound. When you heard it getting louder in the crowd, you knew orders were coming in. If the market was going up to yesterday's high and the sound level increased, you knew at that point in time that higher prices were bringing in new business. If you got up to yesterday's high and all of a sudden the sound level dissipated, you knew that higher prices were cutting off activity. And you learned to respond to that very quickly and automatically because you were conditioned to do that as the market went on. So there was clearly an edge to being a floor trader and understanding the importance of sound. When markets started to become screen-based, all of a sudden, guess what? Sound is out. Now, what is important is sight, be able to see the markets. And that's really where the market profile comes in. Just so you understand, I am not a market profile trader. I simply use the market profile in order to organize the market's continuous two-way auction process. The profile is a distribution curve. And this is what scientists have used for years in order to organize and tease information from data. In order to do that, you need a constant. And in this case, the constant is time. A half an hour between 8 and 8:30 is the same between 8:30 and 9. So, and then you need a variable, and price is the variable. If you compare a variable to a constant, you will get a distribution curve. The profile does not tell you to buy, does not tell you to sell. All it does is organize the data. So from that sense, the profile is a real-time evolving database. Then the question becomes, how do you extract data from that database? You extract that data via sight is the most prevalent way that we do it. And I'm going to try and show you some examples of that. But one of the big things, when we went on the floor, you from off the floor did not have full transparency of what was going on down there. I had a discount futures brokerage firm in Chicago. I would have people say, I'll open an account with me if you tell me what the floor traders are doing. Well, I would laugh. I'd look at the president of the company and say, mark that person as a credit risk because they didn't understand the business of a floor trader. The floor trader was just trying to get in between the bid and the offer for most cases. But he did have, that floor trader had information that wasn't available to the rest of us. When the markets went electronic and you started to be able to see it on a screen, once you learned how to read and interpret the data on that screen, the transparency that you gained versus what a floor trader ever had or what you ever had before was absolutely huge. The sad part is that so many people go and they take lessons and learn education from previous floor traders. And only about 5%, the best anecdotal evidence I have, only about 5% of the traders that were successful on the floor were able to transition to a successful business off the floor. And a lot of these people go out and they teach courses, but they teach the same stuff that was used on the floor. It's outdated, and it was information that may have been valuable when you didn't have the transparency. But now that you have the transparency through the market profile, you have to learn and look at different information. So the floor history was, as I said, we learned a lot from Noy. But one of the other big things, and this is a very key, when we were on the floor, we wanted to know where the orders were coming from. Was it coming? And I laughed. I was doing a program the other day with a guy that's been a floor broker for 22 years, and I made some comment. He said, Jim, it's a little before my time. I forgot he's 80, or I'm 81, and he's probably 50. But what we wanted to know, and I may use some names that you don't know anymore, but we used to know if the orders were coming in from Goldman Sachs, which of course is a name you do know, those orders had more of a tendency to be good orders and give you better direction on where the market would go. If they were coming in, there was an institutional firm by the name of Solomon Brothers. If they were coming in from Solomon Brothers, that was a pretty good indication. There was another institutional firm if they were coming in from Refco. But then if the orders were coming in from the retail brokerage firm, which was Dean Witter at the time, they became Dean Witter Reynolds, and now I think it's part of JP Morgan, or I forget all the machinations. But those orders coming in from the retail clientele, those orders were not as likely to be as pertinent and not as likely to show you upside or downside follow through, depending on if they were buy or sell orders. So it was very important to us on the floor to know who they were coming from. When I was doing this program yesterday with Anthony Crudelli, and we were talking about the floor. When he was on the floor, they knew the numbers of the incoming competing firm, firm 350, firm 300, etc. When I was on the floor, we had signals for the different firms, hand signals, so you knew where the order was coming from. What I'm going to show you is that there are ways that we can help understand where orders are coming from when we learn how to look at and observe the market profile. And this becomes extremely relevant. It's not something you're going to learn overnight. When I look at a profile, I don't see one thing, I see many things at one time, and I'm going to talk about that. There's a word that we use, and you'll see it any place you talk about people that are really big in the performance field. The last time I saw this, Phil Jackson, who's from Phoenix, was it the Masters here, the oldest winner of the Masters, and they showed the routine, the chunking routine that Phil Masters goes through, Phil Mickelson goes through all the time. And it's just phenomenal. Retail traders, brokers, they wouldn't even think of doing that. But what it does, it allows him to chunk information. If you haven't heard the term from me before, chunking sounds like this scary psychological word. It actually isn't. I've got two members of my family, two godchildren that have learned to drive in the last 2 years. And I tell the story this way. When they first learned to back the car out of the garage, it's probably a 12 or 13 step process. Open the door, get in, adjust the mirror, adjust the seats, start the car, put the car in gear, open the garage door, back up a few feet, look to make sure you're okay. The more you do it, it becomes a single motion. So instead of 12 or 13 steps to back the car out of the garage, it's one motion. When you first look at a profile, you see 12 or 13 separate steps. The more you look and the more experience you gain, the more you are able to chunk the information and see it as a whole. Once you start to see it as a whole, you have a much better idea and perception of what is really transpiring or what the possibilities are in the market. Before we go look at some actual profile, I don't know how many times I go through what I'm going to talk about right here, but yet the majority of traders will not take the time to do it, which is probably why no more than, my guess is 2% of short-term traders are profitable. They really don't understand what it takes to be successful. Think what it takes to be a successful tennis player, a bridge player, a baseball hitter. It's phenomenal, the time, the work it takes. But to start this, I've given you 3 books. If you are serious about being a competitive trader, you need to understand how your brain works. You need not only just the regular brain, but the subconscious and how you hone your intuition. So the 3 books are all by David Eagleman. The first one is The Brain, the Story of You. It was the companion piece to the PBS presentation on the story of the brain. The second book is Incognito, The Secret Lives of the Brain. That is really gives you an idea of how your subconscious works. And it's really very, very fascinating. When one of the stories in there, when Einstein died and they dissected his brain, they found out he played the violin because that part of the brain devoted to the violin was larger. Actually, if you certain areas, if you're using the right areas of the brain for something that you really have passion of, it becomes bigger. For example, when you say, "Oh, I'm going to lose weight," the brain pays very little attention to that great grandiose statement. However, so the neural networks and the synapses that connect those things, very little change. But on the next day, you do what it takes to lose weight, and the next day, and the next day, and the next day, all of a sudden, the brain takes more attention, more neurons and synapses are allocated to that. That area actually becomes larger. And it's when you understand that and how the subconscious works, it is an extremely powerful tool. One of the books that we talked about in one of the previous intensives, I forget the exact name of the book, but it was by the chess player, the grand champion chess player. And one of the things that he said was one of the most powerful tools you have is the subconscious. Another example of this, one of our current clients, it was a 23 years professional in the professional baseball coaching, and worked with and under people like Leo DeRocher. And when I was talking this one day, he called me and he said, "Do you know what the gaze heuristic is?" It's when an outfielder looks up and the baseball's hit up in the air. The player looks up and runs under and catches the ball. A computer can't catch that ball. The high level math that is involved. I mean, very high level math. The speed of the ball, the rotation of the earth, all of these things, computer can't do it fast enough to get into the ball and catch it. The outfielder, he's had to practice, just like if you're going to be successful as a trader, you have to have experience, runs under and catches the ball. I mean, it's absolutely phenomenal what we can do with our brains, but most people don't know how to do it, and they don't know how to use that brain and how to hone that brain. It's another book to read in this series. And the book that I've just finished, called Livewire, it's the inside story of the ever-changing brain. That there is brain plasticity. The brain changes throughout life. I'm 81 years old, and I have continually changed and advanced. I mean, if people looked at the courses we did years ago, what we do now, there's no comparison because the advancement takes place. Anyhow, this is that's a very serious slide for those that truly want to begin to turn their trading around, if that's a necessity. All right, I just talked, this is just a slide you can go to our website and you can see the specifics on the seminar, the webinars that I was talking about. What I'd like to do now is I want to go to my screen and I want to look at some profiles and talk about some things. What you're looking at, the way my profiles are set up, this is today, not spread out, and this is just spread out. Same profile, this one's spread out, this one is not. This is condensed. But what I want to show you, talk about what to look at. This is yesterday afternoon's profile. There's the market in the morning. It was a relatively weak low because of its exactness to a reference. It was within a tick of the low from back here on 8/11. Then you'll notice that the I and J periods are almost perfectly matching. This doesn't show, I don't know why this doesn't show, but the half pack, Terry, maybe here, if you look over on today, see
Jim,
the white line?
Jim, click on the apply button above that other profile.
Above this one?
Yeah.
That didn't do anything.
Okay, right click on the screen. Over that profile right there.
Okay.
All right. Go to market profile. Go down to settings. Over on the side, put a check mark and half back.
Okay, let me see. Hold on, I got
down about 40% of the way down. Up a little bit. Up. The orange, just under the orange, Jim. Right there, over to the right. Put a check mark, display half back.
That says border. Oh, display half back. I said, okay. Thank you.
There's the half back.
No, it's not. No, I want it for each half-hour period. Here, I'm going to show you on today. The white line.
Okay.
The white line today in the B period is half back for B period, half back for C period. What you'll find if you look at yesterday is that traders were buying half back from the previous 30-minute period, almost to the tick. When you see that happening, that tells me that these are the weakest hands traders. When they're buying at half back from the previous 30-minute period, that's as weak as it gets. So when we come in this morning, I'm looking at all of yesterday. I can see by the profile where the traders were buying. Remember, I said on the floor, it was important to know who the orders were coming from. Was it coming from Dean Witter or was it coming from Goldman Sachs? When I looked yesterday, it was coming from the weakest of traders. The odds were that when we came into the market this morning, those weak traders were going to have to liquidate or get forced out of the market. Notice what happened. It took all of that back early this morning before it started this huge trend day to the upside. Now, if you didn't understand what was going on yesterday and you see this break this morning, you can think the market is really, really weak. And all of a sudden you get yourself thinking, oh my golly, this week's I got to get short. And then the market turns around and it's a trend day up for the entire remainder of the day. Some people shake their heads and say, I have no idea what's going to. I look at that market, I had a pretty good idea what was going to happen. That's exactly what happened. Then something that you only learn, you can't teach it, you only learn it with experience. But the tempo or the pace as this market was coming down this morning was grinding. And the grindiness of that tempo told me that the reason it was grinding, there was stronger money buying every setback in that market. So the weaker traders from yesterday were forced to liquidate. As the market came down, it was very slow going down. Finally came down to mechanical reference, but it was the slowness was because there was substantial buying underneath that market. And then, of course, the market turns into new highs and a trend day for the remainder of the day. That was understandable, what was going on. Now, you have to know how to look at the profile, but I'm just giving you one example. Doesn't come easy. But if by looking by today, we don't see anybody buying at half back from B period, right? Nobody buying at half back from C period. This is a questionable low. You did get some half back in here, so there was some weakness later on, but the market continues, higher throughout the day. And the other thing that really will help your trading is always ask yourself, what is happening to value? Value represents one standard deviation. Most people are price-based traders. We don't laugh at price, but the value area, which is one standard deviation or approximately 70%, kind of cuts off the loose ends in the thing. So we always want to trade with value. Now, the other thing, just to give you a clue, what I do every day as I prepare, at the end of a session, my thinking's pretty narrow because I'm a short-term trader. Sometimes I'll take things overnight, but a lot of times I'm just doing day trades. So my thinking's fairly narrow at the end of the day. In order to break myself out of that pattern, I immediately go and look at the monthly bar chart. When I look at the monthly bar chart, now I see, okay, we're one time framing higher. One time framing means that this month did not take out last month's low, next month does not take out this month's low, etc. 7, 8, 9 months. I don't even remember how many months it is. After the Trump election some years back, it went, I think it was 14 months, one time framing higher. You want to be a successful trader, trade with the trend. Too many times where we get hurt as traders, we get these biases. Oh my golly, this market's so high. Oh, this market's got a setback. And that has absolutely nothing to do with daytime frame trading. So much of daytime frame trading, you usually have two kinds of days. You either have a trend day, which happens about 15% of the time, or you have a rotational day. On a rotational day, inventory gets too long, inventory gets too short, inventory gets too long. Yesterday was a rotational day. Inventory from overnight was too long, got too short, got too long. Took it back this morning. On a trend day, you have a market that's out of balance, and the important thing in the trend day is to go with the trend. Now, so many times people say, well, I couldn't get on, I was waiting for a confirmation or waiting for a pullback. You don't wait for a pullback or confirmation on a trend day, you go with it. That's part of the training when you start to hone your intuition. Now, one of the things before we open this up for questions, one of the really great things in when you think about window trader shows you the value area. It shows you, the green dot shows you the opening, shows you half back for the day, and you will find that that becomes a very relevant reference. And so it was developed with this idea of the value of sight in mind. And going to the point over here, which shows you the half back of the 30-minute period. Very, very relevant to me to know when I see this morning, the buying didn't come in at half back, way above it. I got a pretty good idea that I've got some pretty good solid buying coming into the market. I can't teach you in one small hour presentation all the things to look at, but I can tell you that Window Trader was built in order to take advantage of what was new at the time, was the ability to understand through the sense of sight what was transpiring in the market. And information is the power for a trader. The misuse of that information will do you in. Like I say, when I start every day, I look at the monthly bar. I see it's one time framing higher. Guess what? Trends are up. I look at the weekly bar, then I look at the daily bar. And I look at all of those. If there's going to be any deterioration in the monthly, it's going to start in the daily. Then it'll go to the weekly. The final place it will come to will be in the monthly. Last October, there was deterioration in the daily, weekly. The monthly in October came down to just a couple of ticks from ceasing one time framing, didn't do it. The market then went on to make several new highs. How to look at the market, either through the profile, with the bar chart. So it's a combination of market understanding, which you can learning to look at the market through sight, self-understanding, which is every bit as powerful. You get to start on self-understanding, read and understand the brain and how it works. And it's that combination of market understanding, self-understanding, plus your strategy that really gives you a fighting chance in the market. Terry, I hope that's some introduction. I congratulate you on what you did with Window Trader. It has been a godsend for me. Let's open up some questions.
Thanks, Jim. Okay, yeah, I've got some questions here for you. This first one is real interesting. It says, Jim, I have a problem in my ES trading. I always want to go short and not going long when I should. Is there a way that I can fix or work on that problem? Thanks.
Remember that anytime you do that, you've been doing that for years, I'm guessing. You've formed a habit. That habit is just as powerful if you're a smoker, an overeater, an overswearer. You remember I talked early on, you don't lose weight by making a grandiose statement that, oh, I'm going to go on a diet. It's what you do day after day after day after day to correct it. So the first thing, if you're serious about this, everybody asks that question. It's like, I have a bell that's going to turn that around. It's not going to change. It's a habit that you built. Understand those 3 books when I'm talking about the brain. Understand the brain and how it works. That starts to give you understanding of what a habit is. Understand how that habit has been built into your self-conscious. And until you change that, you're not going to change. You're not going to do away with that problem. And you probably have my guess is you probably have a bias, and that bias is, oh, this market's just way too high, or this market, the risk is huge. And that may be for some longer time frame. Day time frame traders, when you start thinking about other things that have to do with investment counted day time frame traders, you're dead. Day time frame traders is mostly inventory related, or on about 15% of the days, it's a trend and you've got to go with the trend. I know that's not a nice, simple answer, but there isn't a nice, simple answer to your question. It's a habit that you've built over a long period of time. Every time you've done it, you've solidified that habit. The more you think about it, you will probably continue to repeat it. Okay?
Good, Jim. Thanks. All right, here's another one. It says, about today's structure, at any time during the day, were you thinking of taking a short position?
Yes, I was. And matter of fact, and I knew that was wrong. I knew what was going on. It was new high. First of all, one of the things is to understand that the markets, the main strategy in any markets is momentum. What we do with the education course and the use of the market profile, we try and put context around the momentum trade. But you have to understand momentum traders. Momentum traders buy new highs. Now, if you talk about going short, yes, I was short early this morning. I actually came in short because I thought we would see this correction of what I saw was weak inventory yesterday. From then, remember we talked about the importance of one time framing? C period did not take out the B period low. D period did not take out the C period low. If there was going to be any downside, it was probably right here. When D period couldn't take out C, it's gone. E period did not take out D period low. F did not take out D. Usually, one time on a trend day, you will see the cessation of one time framing. This is a little earlier than some. One time, no downside follow through. So if you did short it here, you didn't get the downside follow through, then you've got to cover that short. Now, here's an honest answer. I really did want to go short the market, but I knew not to go short the market. And I actually got up and I took a 45-minute walk around what's called Lynx Lake out here. And I said, I'm not objective. I know where the market's going. I know value's higher. I know momentum traders buy new highs. And this was, I think today is probably the 47th new high of the year. So what did I do? I got up and I took a walk. I walked away for about 45, it was actually an hour and a half by the time I drove out and drove back and did the walk. And I said, okay, thank you. And then I was fine. Yeah, sometimes I get those things. I'm human. I make mistakes. But I knew value was higher, and you don't want to go against value. If, in fact, you're going to short this market, you better be right. If you got higher value, you short this market, you better be right very, very quickly. If you're not right very quickly, the market's going the other way. Okay, what else?
Okay. Jim, here's another one. It said in today's rally, many time frames had weak lows in the D, E, F, H, and J periods. Would you say that today's structure is also weak?
Yes, I think today, you got to be very careful. I personally think today's structure was exceptionally emotional. When markets are very emotional, they get very strung out. And this is very strung out. Won't surprise me if within a couple of days we come back down through this structure. But if you look at market history, it's rare that it comes, when you get a structure like this, it's rare that the market comes back down through that structure the following day, particularly if it's with the auction. If you had the same structure on the downside against the auction, it might come back. With the auction, it's highly unlikely. One of the things that I didn't point out that was very valuable to me this morning, yesterday, the high was made overnight. The last 2 days, I don't have the overnight in there for yesterday. The last 2 days, the high has been made in Globex during the electronic trading. It is rare, if you ever listen to me, it is rare that that is lasting. If a high is going to be lasting, it usually occurs during pit session hours. So this was something else I had my eye on this morning that we might probably come back. And you can see when I label my charts, which is another great thing that Window Trader has built in, the ability to go, if I go, and let's say, if you haven't used Window Trader and haven't seen this, if I click on a price, so say I'm going to click right here, I then go here, I come up to label right here, and I can type in very easily, like I just did there, to help me keep my charts neat, clean, and remind me exactly why I marked that level. That also helps me maintain perspective. Now, when you see these markets like this, first of all, you want to see, does Globex take out today's high? We have no excess on today's high now. Excess and balance are the two most important concepts you deal with. Like I said, yeah, I thought this was pretty strung out. And yes, I think there was a lot of weak hands buying, but it's an upside breakout. That's what momentum traders do. The other thing is, remember, this is a big options expiration week, and you've got options expiration tomorrow. Sometimes that can make it a little squirrely on the market. Okay, other questions?
The question here asking if you could review the NASDAQ.
No, I don't. I didn't look at the NASDAQ today.
Okay. Well, Jim, that's all the questions I've got. Great job. Let's see. Oh, wait.
And if you're really serious about what we do and how we look at the market, you want to start with the foundational e-course. Terry and I talked years ago about doing these courses. I used to do tape sets, and we did the books, and the books were written many years ago. Still valid, but there's a lot of things in there that have changed. The e-course that I wanted to do, I really didn't have the skill set to do everything. When I teamed up with Jen and RJ, my two partners, they have the ability. I'll record a day, and that day may take me an hour to record. They will spend 10 to 11 hours on notating that day, putting little boxes in, little arrows, and then you go replay it, stop, start, look at it. And it is a wonderful way. It's a wonderful way to learn the market in there. So it gives you a great foundation. You get that foundation. If you really get serious, then you probably want to get involved in one of the intensives. Terry, thank you for this opportunity, and thank you all for letting me present to you today.
Okay, Jim. Well, thanks again, and have a great week. All right, everybody.
Thanks.
Take care and trade well, and we'll see you later this month.